Running your own business can be lonely, finding reliable professionals difficult, and generating new business challenging, but not when you have a business network. NewGen Networking provides its members with new and exciting business opportunities, with the chance to build lasting relationships with vetted businesses who can act as your sales team and solve the issue of who to turn to in your hour of need. With a range of flexible and affordable solutions, NewGen apply tried and tested principles in a modern way to suit today's world. To find the right option for your business, visit newgen-networking.com or call 03333 600 680. NewGen Networking. New business, new contacts, a new generation of networking. You're listening to the NewGen podcast exclusively on the Pod Station. Here is an interview with one of our members from the Vinci Hub.
Good morning, everybody. Welcome to our NewGen Business Spotlight. For our audience and everyone out there, please welcome John Bolderson from Venture Funding. Round of applause. Welcome, John.
Hello. Hi, Dave. You okay?
Now, this is weird because you're normally this side of the mic.
I know. It seems really strange.
So I'm under a lot of pressure today to get this right. Tell us all about your business, John.
All
of it.
Right. Basically, we're an independent broker, a finance broker. I'm not sort of tied to any lender for funding, and it's specialising in business and property funding. As a broker, we can take our clients to the lenders, so to prepare cases, put the applications together, and in various sources really. Tend to do a lot on property, but we do cover any funding that businesses would need. Okay. That's
we've got to be careful here we don't get into all jargon, because this could get very boring for everyone else, but really good for us. Yeah. So as a mortgage broker, obviously I'll deal with sort of like, your standard buying a house and stuff like that. Yeah. But what's the sort of differences then? What sort of cases would you get that would be different?
From the sort of residential and the normal mortgage side of things, obviously commercial mortgages, and semi-commercial mortgages as well, where basically a semi-commercial mortgage might be part residential and part of business, so a shop with a flat above is a typical, and then commercial mortgages from anything, whether it be from a hotel at one end to a small unit, a shop, people buy in through their business, so where you would use a business loan, so it's a commercial mortgage, slightly different from residential. The main difference really is that usually it's only over a 15-year term. That's one of the main differences. So that's sort of...
And people, mortgages can be fairly straightforward. You want to buy a house, you've got a deposit. Yeah. There'll be all different ways in commercial funding, can't there? Because you can use stock that you've got and stuff like that. Yeah. I mean, it's difficult really to just sort of have a quote and say there's a product or there's a way of doing it. Really, it is getting to know each client, because you can secure against your business, but you've got to look at the trading of the business, other assets. You can use your pension funds. Yeah. And is it it's more individual probably, is it? It's more like you really got to dig into the business, the client, and design the product. Where I suppose in my area, the products are given to you, and you use them, where you've got to really design.
Yeah, you tend to not have a product or a panel or something you can just go off. People will tend to, maybe if the bank will say no, but they'll say no for whatever their reasons. But the difference between how long people have been trading, their experience, their knowledge, certain property things lenders don't like unless you've got other properties. So it's not just going and buying a property in the same way. And then things like the bridging finance and development finance, that type of thing, where you can usually maybe get a property or get something that you couldn't do if you just went down the normal sort of routes. There's different ways of doing it, really.
Well, I was going to come on to the bridging, because that's like, we'll get people come to us, I found this house, it's got nothing in it, no kitchen, no bathroom, no nothing, and you're just not going to get a normal mortgage on it, but you want to buy it and do it up. Yeah. Now, to explain how bridging sort of works, because it I don't know, I always found it to be a bit of a, if you like, dirty word, really expensive. Yeah. But you've got to treat it like a business, haven't you?
Yeah, and it's true. I mean, I think historically, and I mean, it isn't a cheap way of doing it. It can be expensive.
Just explain how it works and what you do to get it.
Yeah, I mean, the lenders who do it, the short-term lending, so maybe up to a maximum of 12 months, so it always needs to be repaid. They tend to be more focused. There's a huge raft of bridging lenders, but they tend to be more focused on the property and the deal. So if you can buy something, like you say, that's maybe not got a kitchen, roof, or it's part built, depending on its value and what you're going to do to it, and as long as those plans are in place and what the end value is going to be, so there's then an exit from it, whether it be you're selling it or you're then going to mortgage it onto a normal mortgage, they will tend to lend. So it could be seen to be it's a bit easier to lend, so the criteria isn't as much based on your incomes and your trading history, the things we talked about before, or even your credit to a degree. But it's got to stack up as such. So as a deal, it's got to stack up to lenders.
It's more based on the value of your assets, really, isn't it? Because I mean, I suppose the way to look at it, normal mortgages, a bank has money, lends you. In this will be individual people, won't it? With sort of like, say, 50 million quid.
Yeah.
Give it to a company and say, go and lend that out.
Yeah.
But get it back quickly with some interest on it.
Yeah.
And then they're turning that round, aren't they? So typically you'll only have it for like 6 months if really.
Yeah. I mean, and it's exactly like that. You'll get there's big bridging companies, and their funding line comes from banks in some cases and other sources. But there'll be very small bridging companies and private individuals who will have a pot of money, which is quite a lot of money, but in relative terms it's not. And they'll just lend it on specific deals, their criteria. So they're not the sort of people you can normally just find on a panel. And they make a decision on each case, really. So our job's to make it presentable to them, but also that you're not getting the client to just get a bridge to get the deal done, because you've got to have an exit from it. I think historically it was a bit, you can get the lend and that's it, then worry about it later.
Well, you've got to have someone like me be able to get
you've
out
got
of
to
it.
be able to have an exit from the bridge, and if you're doing your job right, you've got to make sure,
because ultimately if you don't pay it off in time, the interest rates will be massive, or they'll repossess. So it's quite risky. But I suppose anyone taking that risk knows it.
The rate, the fees up front and the monthly fees, it's charged monthly, are more expensive. So you wouldn't leave it long term, but it's hugely used. I mean, developers, property people. But because it stacks up, it's a way of doing it. But if it doesn't, and you do sometimes get asked about people trying to just get a property where really they're just trying to buy a property, which
I suppose the example out there is, if anyone watches Grand Designs, you'll see someone say, right, I've got a plot of land, I want to build a house, but they haven't got the funds. Well, you can maybe bridge it for 6 months and then convert it to a mortgage and pay the bridge off, but they'll give you the funds to do the work, but then it's worth a hell of a lot more, isn't it?
So you're sort of going a bit over into the development finance, which is similar, and they will look, if you've got other properties, if you've got other property portfolios, you can secure it. It's just looking at the bigger picture, really. But those types of properties you wouldn't get a mortgage on, and you know that.
That's
you can't get a mortgage, can you? But as long as it sort of comes...
But then when it's built, it's a totally different picture, isn't it? Another part of the market which we both deal with, but I constantly get the call, I've bought a house and I bought it at auction and I've got to complete in 28 days. And you go, well, why the bloody hell did you do that? And then that's where you'd come in with a bridge, where really we've got to get that in place, otherwise the penalties are pretty bad.
I mean, that one of the big areas for bridging, and all bridging really, is that it doesn't always happen, but that they target completing within 28 days.
On an auction, you have to complete. You sign a contract to complete on 28 days, or then I think I had a client recently, it was £1,000 a day if he didn't. So you've got to, I've had a couple of cases. I've had somebody yesterday contacted me about something that wasn't straightforward, but was looking at doing a bridge, and I said, so where's the auction? What are you doing today? So he rang me last night about 3:00, so it'll be a challenge if he... And it tends to be the pressure's on there,
but you can potentially complete, but you've still then got to know you can get out of it, so it's
okay. And I know you do some, we've talked, and you do other things, sort of like maybe a business wants to lend to, get some new equipment. You can do that
side of things, all the sort of assets, equipment, you can lend against invoices and your debt, etc. Get involved in that type of things. You might go to the bank for, maybe, which it is going to a bank, but there's specialist lenders who will lend in certain areas which we've got the access to, really.
And again, that's invoice financing, where you're sort of saying, well, I've sent all these invoices out, they haven't paid me yet, but you can borrow on the strength of that to keep cash flow coming.
Yeah, I mean, that's a massive thing with certain businesses where people will say, I've done all the work and I'm owed X amount of money.
Yeah.
But they're not going to get paid for 30 days or 60 days. So there are lenders who will lend against the work that you've done, as long as there's an invoice. Again, it's not right for everyone, but that's where you're sitting down and looking at it, and there's so many more options than just maybe your own high street bank. There's lenders who specialise in that and different ways of doing that. So so that's where we can help. Yeah,
and I mean, obviously everyone's sort of busy expanding now. Are you starting to see people wanting to buy maybe shop fronts, or is that growing?
Yeah, I mean, obviously the last couple of years has been a bit chaotic for everyone, hasn't it, really, and particularly from the lending side of things. There's far more inquiries and far more people asking about doing things and wanting to do things, and looking at some of the finance they've maybe taken out over the last couple of years, just different ways of what they can do. So I think things are moving. Whether the lenders are keeping up with that and being able to, but people want to do things.
And if you want to buy sort of a unit or a shop, what sort of typical deposit would you sort of really need? Because
on commercial, I would tend to usually say 25-30%. You can get 90% commercial mortgages. The more you've got to put in, the more
the better rates
you've got, and the better rates and things.
It's like anything, isn't it? And typical sort of for you, people like to be, I suppose accountants are really good because we've got loads of businesses that want to expand. Is that a good sort of way to...
Working with accountants is brilliant because I mean everything their clients would do will involve the finance, and a lot of cases they will ask the accountant. So and
I suppose it's like anything, it's always good to do a review, isn't it, of what you've had. If you might have had it for a good, say, 10 years or whatever, you can review it and see what's out there.
I mean, one thing a little bit, because obviously from my background in personal financial services, and we tend to sort of, if we can, point people in the right direction to refer to other people and the way they've structured things. People do just tend to go to their own bank, which is great sometimes, but they might say, I've had that loan, I've had that facility, I've had that life cover, or things that I'm not directly involved in, but we can look at, but they've just got that in place. So even to review your commercial loan, your commercial mortgage, and the portfolio, you've got the lending. People sometimes, because it tends to be an opportunity, people just get it however. And it is quick, but it's worth just sitting down and saying, is this the best way of doing it going forward? So.
And obviously the development finance is quite a big thing. People building houses, or maybe with a plot of land want to build 10 houses, and you funding that, really, that's probably that's more and more.
That's a big, and that's obviously moving now, the property side of things, really. So and a lot of people who've got land, if they're sitting on land, and people looking for land, so that can often be the deposit. So it's not necessarily needing money. So if they own land outright but they want to build property, you can raise the finance to do that.
Brilliant.
And they tend to release the funds over a stage period as the development goes. So.
Fantastic. Okay, John, anybody in the audience got any questions for John?
On the back of the worldwide pandemic, how's that affected the products that are on offer, or the deals that are available for people? Has it made it easier, harder for people to get hold of finance? What sort of things are they considering that they might not have done previously?
Good question. Probably generally made it harder. Lenders are still initially, they're still doing it, some of them, but became sort of pandemic questionnaires to be added to it. So looking at whether your staff's been furloughed or what loans you've taken out in the time. So that does come into it now, particularly for other business expansion. And lenders are a bit more wary of anything. If there's a reason to hold back, they will do, I would tend to say. So it's affected everyone, and I think it actually became quite easy to get some funding during what's gone on the last 18 months. Going forward, that's obviously something you've got to consider. You've got that £50,000 loan, or you've got your staff. So it's, I suppose I'm saying it's not any easier. And there are some lenders who will, maybe there'll be different products that have come out, but some lenders who've gone out to the market as well and won't lend anymore for a while. So and that happens quite a lot as well.
About lending to SIP pensions, timescales, problems, issues.
I mean, whether people are aware, you can obviously use, if you've got a pension fund, you can use that and lend against that. So when people say they've got a property that's inside their pension, a lot of lenders quite like it, or the lenders who do it, it's quite a good sort of thing, because obviously you can borrow against the value of your pension fund, and then the asset sits inside the pension. So it can be sort of criteria and the types of properties you can buy and who's going to be the tenant and what you're doing there is quite just crucial. You don't let you buy anything because it's linked in with the pension trustees, etc. But as a way of lending, it can be quite a good way because it's a strong structure for that. So yeah, definitely. Not particularly any reason why it'd be any longer than any other sort of lending, because potentially if you've got your fund there, that's the deposits as well.
Okay. Great.
So yeah.
Thanks, John.
Okay.
So yeah, a question on that now, John. Pension. So you could effectively, if you've got a good pension pot, you could buy something with no funds at all.
Yeah.
Because you've got your deposit in the pension, your costs are coming out of the pension.
Yeah, I mean, if the fund's big enough, you can, if in theory if you've got £100,000 pot and you want to buy a property that's worth 80,000, you can buy it cash. Yeah. But stays inside. There's obviously issues and
any rent
advantages,
disadvantages.
pension,
hasn't it? You don't make anything at that point, but
there's a lot of advantages in doing it through a pension from a tax point of view. There's some negatives because it sits in the pension and what you can do with it longer term. So again, whether it's the right thing. But if you've got £100,000 fund, you can lend up to 50% of that as well. So you could buy something for 150 and use your pot or whichever way you want. So
okay.
This is more of an observation really, but I suppose with the two of you working closely together, because with all borrowing there's an asset.
Yeah.
So I suppose you're able to see whether somebody's got private assets or business assets and where the funding perhaps should sit best for the client.
Yes.
Yeah,
definitely.
we'll talk daily really with a case where someone's come to me for something or to John for something, and we say, look, I can't do it this way, but I can do it that way. The auction is the biggest one because people think you're just buying a house, which you are, but you're on such a tight time scale. We're just a normal time scale to buy a house is 3 months. You've got to do it in 28 days because you give the auctioneer 10% deposit on the day, cash. You pay them a fee. If you don't complete, you lose that, and then you get charged daily. Yeah. So you break, because you're at an auction, you're signing you're exchanging contracts on that day. You have to buy that property, and most people go into it not knowing that. Again, if you've all watched Holmes Under Your Hammer, they sit in the thing and that hand goes up. They win it and go and then they go, right, how do I buy it? Yeah. And that's when I get the call and I have to say to John, we need a bridge quick. Yeah. And then I'll do it to get out, so it sort of works both ways, really, I suppose.
Yeah, no, that's right. And I think even with yourself, Andrew, we talked about stuff. So within, whether it's bought through the business, whether it's personally, whether it's in a limited company, whether it's personal lending, but that's why it works quite well, really, together.
I saw something yesterday that said that 30 years ago, the average cost of a house was 3.1 times the average earning of a person. Whereas today it's 7.4 times the average earning of a person. How do people get on the property ladder, and how do lenders lend on that basis?
I suppose
that's for you. That
it's interesting though.
What it is, Dave, is just lenders just push the parameters all the time.
Yeah.
So they'll push. I mean, interest rates are low, aren't they? So lower than they've ever been in history. So that helps. House prices never go down, but salaries don't quite keep up. But we keep going. I think the lenders are always restricted, but there's always a lender doing a little bit more, and then a little bit more, and another one just coming out with ways.
I think as well, they've gone a bit more, haven't they? I mean, you'll know for definite. Whereas it used to be, it's 3 times your salary. Yeah. It's a bit more affordability now, isn't it? Yeah. So they look at everything. It's
based on everything that goes in and comes out each month.
And when the rates are lower, in theory, if you can afford that, it's like somebody might be paying rent and paying more. The mortgage is cheaper than the rent.
Lenders don't try not to talk in terms of times income anymore. So the affordability model helps there because you can use different things. But I know a lender there that'll do 6 times and publishes that, but not one of the high street lenders. But typically 4.5, 5 times income is the way affordability works. And then you can use other income as well. So things like tax credits and child benefit will be put into the pot. So but it's right. If house prices continue to rise, wages have got to go up. Otherwise, it's a struggle. So.
And then, do you find, John, that the government last year brought in a number of schemes to help businesses kickstart themselves? They called them kickstart loans and all sorts of other things. There's been a lot of criticism in the press that the money actually ended up with the wrong people, with companies that didn't require the money because they were obviously a lot more secure. Is anything being done in the lending sector to sort of help companies that have been adversely affected over the last 18 months?
Like Mark's question before, I think lenders will always sort of look at the situation. So in theory, yes, they're looking to help. It's not easy, and it's true what you said. I think there are certain businesses that didn't need the funds they've taken, and I do know of businesses who've got that money sitting there still, because it was quite easy to take. But in theory, it was easy for everyone. But it's whether now long term, and you've got to start paying it back. The problem now is some of the loans you've got to start paying back, and people are starting to struggle then. But there's nothing specific that's let's refinance that and redo that, but that's where you would be looking at it, as the saying before, to look at the whole plan and what the business is doing. I do think some people might find a few challenges over the coming years justifying what they spent the money on and what they did really when it comes out, because it was for specific reasons really. And
I think in answer to that, on our side of it, on the residential lending, there was if I've got a client there that turned over 35 grand year before, his accounts this year 724 quid. So when we look at lending, we're basing it on £724 a year. But what lenders are now saying is, we understand that. So if you can show us 3 months worth of income, now you're back in work, we will sort of like add back in your grants that you've had to make your income more what it was. So there is a bit of understanding. Certainly on my side of things, the residential, that'll be the same on the other side.
It is the same on the
as we come out. Right. I just want to say thank you for John. Hopefully I've not done you out of a job and you'll be back in this seat next week.
You were very good.
How do we get hold of you then, John? Everything's on the NewGen website and everything, but you got a website?
We're just in the Mark's starting to laugh there to the side. We are just, it's becoming a bit of a laugh each week, but I am just in the middle of rebranding a bit, so,
so
obviously through NewGen's a good one. I'm on LinkedIn, etc., but there will be a website soon.
All right,
but,
I think get onto the NewGen website, have a look, you'll find John's details on there. Just want to say thanks very much.
Thank you.
Really good. Round of applause for Mr. John Bolderson.
If you would like to visit one of our online or face-to-face hubs, visit newgen-networking.com and book a place. Get social at Network NewGen on Instagram, Facebook, Twitter and LinkedIn.